Yeah. What were you guys doing in 1991? So good morning, everybody. Comment allez-vous? Son, being born 91. Is that right, Geek? Yeah, really cool. I don't think I've ever danced to Public Enemy, but anything can be done. You know those French Canadians, eh? Yeah. If you go to Saskatchewan, dancing's illegal, I think. But anyways. Who is that artist? Are you kidding me? That's Public Enemy. And then they did a crossover with Anthrax, sort of like Aerosmith did a Run DMC thing and reestablished their career. Yeah, easy now. Jean-Guy. Yeah, Terminator X died or something, didn't it? Anyways. Oh, really? Yeah, Public Enemy. So this was before gangster rap. Oh, this is awkward. Oh, by the way, you know what that is? Harvard sent it to me. It's the key to success. It's funny, but it doesn't. I don't wear it. Well. Yeah, so that was before gangster rap, guys. Before you're singing about how fast your car is, or Bentley you're driving, or how many G's you made today, and all this kind of stuff. How many girls you slept with. Before all that was Public Enemy, and it was also angry music. But it wasn't angry like NWA. It was angry against the man, against the government, against society. And it was trying to uplift black people. So, anyways, it was political. It wasn't gangsta. And it was, to me, it was very interesting. NWA and Two Live Crew. I wouldn't put those two guys together. NWA was a legitimate group. Two Live Crew was a press release. But anyways. All right, so what are we talking about? Where are we in the world? ECB is going to do something. Doubt it. Let me tell you about the ECB. They're willing to do less for longer. Excuse me. They're willing to do less for longer. And I don't even know what that means, but it's very European. But let's get going. So, good morning. It's a Thursday. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. 7:39 on Wall Street. In just a few minutes, the ECB will make a decision on their interest rate. So that's kind of the agenda today. We'll also go over the dollar pairs and the yen pairs and everything euro. All that kind of stuff, but it's been a pretty good week. A lot of things
just over
are
5 minutes to the east.
A lot of things are moving properly, which I'm very happy with. A lot of great swing trades have worked out. You know, our bullish stance on oil was really helped out yesterday by Trump, who tweeted that oil prices were too low. Or sorry, anyways, he tweeted about oil. By the way, my name is Wayne McDonell. I am the Chief FX Market Strategist for TradersWay.com. Thank you very much for being in today's webinar. Namaste. Throw your diamonds in the sky. If you are a Traders Way client, you got to go like this, right? Diamonds in the sky. There we go. We do these sessions 7:30 in the morning, Monday through Friday, with the overriding goal of helping you put together trade plans. See, I want to teach you how to make your business decisions. I've always looked at Forex as a business. I've never really traded. Well, actually, never have traded anything before Forex. Dabbled in commodities as well as Forex, but that I did for Forex first. Somebody asked a question about a book about fundamentals. And, you know, I never read a book of fundamentals. So the way I learned was I studied for the Series 3 test, which is the commodities and currency fundamental test for being licensed to advise people on trading, specifically commodities and such. And I learned from that by studying for that, which 70% of people fail that test, and it's a bear of a test. But they teach you to, like, if you were an elevator, a grain elevator operator, and a whole bunch of farmers came and dumped their wheat, and now you bought this wheat and you have all this wheat there, you know, how could you use the options market to hedge them, right? And then what other kind of trades are there? You know, can you trade, you know, for example, Kansas City wheat versus some other type of wheat, right? Intra-market versus intermarket and all this kind of stuff. And you can do crack spreads if you're talking about, you know, you're long oil but short gasoline, for example. All these very interesting things. So that's where I learned, actually studying for that. And honestly, I knew nothing about fundamentals and in particular the commodity world before that. So that's where I learned. Sign up for that, I guess. Save your money. Take the fundamentals course at FX Bootcamp is another way of doing that. And then on the, so like speaking about the fundamentals course at Bootcamp, at FX Bootcamp, there's one there, but it starts out talking about like what is money, right? And works its way up there. By hour 3 or 4, we're looking at balance sheets of commercial banks. You know, what side of the balance sheet are deposits? Where do the when the bank manager just puts some money at the Fed, where does that go on the balance sheet? Then when they deploy that capital to put it to work, and they buy a bunch of bonds, where does the fixed income assets go on the balance sheet? And then the bank's money, where does the bank's money, you know, the bank capital, where does that go on the balance sheet? And talk about all of that, but then it goes from there to how does the bank actually make more money in the economy, and then how is that influenced by the central bank? And you know, that's kind of the angle we go with the fundamentals, not necessarily, you know, how to hedge grain. Okay. Oh, Ashraf Lottie wrote a book on fundies. Okay, that would be an excellent book. Ashraf is very smart. I like Ashraf. Yeah. Lottie-dottie, we likes to party. We don't cause trouble and we don't bother nobody. Cool. I don't know if the book's any good, but Ashraf is nice and he's smart. All right. All right. Cool. So the Fed was hawkish yesterday, don't you think? They raised interest rates. They're going to raise interest rates more. And we talked about this yesterday. Oops, I got to move this over. We talked about this yesterday where, you know, your university professor told you in this situation where when a central bank is hawkish, they raise interest rates. And then when they give you an outlook of raising interest rates further, it's even more hawkish for the market, and therefore the currency will strengthen. Especially when relative to the world interest rate, if the currency that you're watching, they're raising interest rates, they're expected to raise interest rates further, and they're already much higher than the rest of the world, right? ROW, as they say in economics, right? In that case, you've been taught that the currency will be ripper strong, right? Okay, ECB leaves it unchanged. So anyways,
alter the language in the monetary statement. So looking for the change. They'll buy bonds through December. Buy bonds through December. So lengthening the time frame by 3 months. So changing the time frame.
Oh, what?
Tapers 15 billion. So a taper here at 15 billion. Extended it to the end of the month. So a change there for the ECB on bond buying. This was not expected. They're only for an acknowledgement. The year was up 0.5%, 118.50 getting lifted. A change by the ECB in the taper. So they reduce the amount and they extend it by 3 months to year end.
Less for longer. Called it.
About 38 ticks, middle portion of the daily range. Modest uptick in the Europe.
I love it. Less for longer. Less for longer. So they're cutting the amount they're buying, and they're going to do that for 3 extra months. They're going to do less for longer. Who said that? All right. So they're going to do that till the end of the year. So remember, they were going to do 30 bill till September. Now they're going to do 15 bill to December. Less for longer. Holy smokes. Yeah, I know that. I just knew that. It's my gypsy ways. How cool is that?
Give it back. The bought with the gains now a little change from that decision. Give it back the initial pop up.
Oh, thank you. Yeah, for the new
ECB noting that its actions today ensure the convergence of the inflation to goals.
Yeah, I'm a little disappointed on one aspect though. So I have this whole office soundproof. Spray foamed ceiling, spray foamed all the walls with soundproofing material. And then because there's hardwood, they installed doors that should have been installed over carpet. So there's like an inch gap under my door. Like, why did I soundproof it if there's an inch gap under the door? So anyways, I gotta bring somebody in to fix that. It's just amazing. So like, there's just people, oh, I guess when you have any kind of work done in your house, you lose faith in humanity. I don't like being exposed to normal people. Look at that kickback. Never met in the corrupt like the senator, so very nice. So like, I had a secret room made somewhere in my house. It doesn't even have a door. You push on the wall and the wall opens up. And I'm like, what's this? He's like, oh, that's the switch to turn light on inside the secret room. Like, but you put the switch on the outside. He's like, yeah, that way it's easy to turn on. It's a secret room, bro. That's a secret door. Nobody's supposed to know that's a secret door. You put the light switch on the outside, so like, what the hell are you thinking? You put the light switch on the inside. Do I have to tell you this? Oh, well, we don't usually put them on the inside. Well, how many secret rooms have you built? None. Oh, Jesus. Jay, I'm like, are you retarded? Yeah, I guess that makes sense. You wouldn't want to see the light switch into your secret room. So anyways, I have a 50 Shades room. And yeah, you kind of, nice kickoff. Look, we drew this like 3 days ago, yo. Amazing, huh? So it kicked off the weekly R, which is last week's, last week's target, R2, is this week's R1. It's held really nice. So if you are thinking about being a bull, we got bullish down here, right? And then our second bullish is here. You may recall we did this like at the beginning of the week. These are the areas you buy. These are the areas you sell. Did I see the movie? No. Yeah, Rob, must be his first. I didn't know. So anyways, there's lots of little stuff like that, but it's fine. Okay, so we're at the monthly now. You really need to know if you're going to counter this. Okay. Oh, is it really? Oh, I see. I was supposed to say that to him, right? Yeah. So it's just funny things like that. I'm like, dude. I ran into another problem. I'm building, or they built a wine cellar. Sounds really nice, right? Yeah, cool. So it's all built. It's all really nice. Then I go to measure it because I'm having all the wine shelves and stuff for the storage to be made, right? Pretty simple. So they need the dimensions so they can all. And generally, the ceiling's 8 foot high. So I'm like, I need an 8 foot high ceiling because the wine racks are 8 foot high ceilings. So like, okay, so we'll build that. Well, once they've finished the insulation, or once they've finished all this and that, and putting the ceiling on the whole thing, it's 2 inches short of 8 feet. So the wine racks won't fit. It's like stupid. Yeah, cut the leg. That, you know what? That's what my wife said. I'm like, honey, I didn't spend this kind of money to like cut the legs off because my makes me mad. It's just funny. It's just so I've lost all hope for humanity. I eagerly await the zombie apocalypse. Humanity needs a reboot. All right. So this is the kill zone if you're thinking about it, right? Actually, Mike, we did dig out the floor. We dug about 2.5 to 3 feet through the concrete down into the Georgia clay and poured new concrete so it would be strong enough. Okay. Whoop, whoop, whoop. Beautiful kickoff. Yeah, beautiful kickoff, guys. Holy snicker. So less for longer. Euro weakens because they're still doing quantitative easing. They're doing it for longer, which means what? The European economy isn't as strong as we thought. We kind of knew this over the last few months, right? Trying to see. I thought I got a headline in regards to more about what they said. So the biggest thing really is instead of cutting it off at, in September, they're going to again drop it from 30 billion to 15 billion and keep buying bonds until December. And of course, when you buy bonds, and this is again straight out of the fundamental course, right? When the central bank buys bonds, they go to a bond dealer like Deutsche Bank, who is probably insolvent, but they do it anyways. They go to Deutsche Bank and they're like, hey, Deutsche Bank, we'd like to buy some bonds. So they buy some bonds from Deutsche Bank. What does Deutsche Bank get in exchange for giving the ECB the bonds? Well, Deutsche Bank now gets cash. Okay? The cash then right, gets distributed through the economy, assuming Deutsche Bank's going to make loans. Also, the interesting thing is 20% of that also gets put back at the ECB in the form of required reserves. Right? You get things like 1 over R plus E. Right? It's the same thing, Charles. It doesn't matter. So one of the things I talk about a lot as a kind of a sidebar in those videos is that the central bank doesn't print money. So you'll hear it all the time, like, oh, the Fed is printing money like crazy. Who prints money? The Treasury. The Fed doesn't print money. Right? So I think it's funny. You hear it all the time. Oh, the Fed is printing money. They have printing presses. No, they don't. Okay, they manage the fractional reserve banking system. Okay, so anyways, so you need to know these things fundamentally. But if the ECB is going to keep buying 30 billion in bonds from Deutsche Bank every month until October, and then 15 billion more bonds per month till the end of the year, that's a lot of billion, right? What is it? July, August, September, 30, 60, 90 billion plus 45 billion, right? That's a lot of billions. I forget the math now. Was it 135 billion? So the ECB will buy $135 billion worth of bonds between now and the end of the year. And now that money eventually will get put into the economy, assuming we have perfect money flow. Let's say all that money immediately gets put into the real economy. How much money is that? How many euros is that? If we have perfect mobility, the ECB buys $135 billion in bonds from Deutsche Bank. Deutsche Bank lends it all out immediately. It's an instant transaction. So January 1st, how much more money is in the economy than today? Type in a question mark if you don't know. Okay. Well, 20% of it's supposed to go back to the central bank, right? So Deutsche Bank, let's say $1 billion gets put at Deutsche Bank. Let's say it's just $1 billion. Or, well, no, let's say it's 10 billion. Okay, let's just try to get the math easy. 10B gets put at Deutsche Bank, right? And let's say 20% gets put back at the ECB. Right, so now we got 8 billion. Well, let's just start with the 10B. Okay, we got the 10B. That gets loaned out, right? And when someone loans you money, what do you do with the money? You spend it. That's why you took out a loan. So you go to a bank and say, "Hey, bank, I'd like to buy a house." And they're like, "How much does the house cost?" And you're like, 10 billion. And they're like, "Okay, we'll lend you 10 billion for your house." Okay, so you get 10 billion, but what do you do with you cut a check and you buy your house. You don't borrow money to sit on cash. You borrow money to buy an asset. So anyways, you transfer the money, and now you get the asset. So that person deposits it, right? So now they have 10 billion. 2 billion gets put at the central bank, and then there's, right? And these guys have 8 billion. They have their money, right? They spend it, it goes to someone else. 20% gets put here, and 6.1 gets put here. that gets spent, right? Another 20% gets put somewhere and all this. And it goes up over and 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 over again. Okay? So by the time it's all done, this gets spent, right? And then this gets spent, and then this gets spent, and this gets spent. So, right? So 1.35 trillion euro. If we had perfect mobility of money coming into from the ECB to the banking system loans it out, and then it goes to another bank who then puts 20% at the ECB, and they loan that out, and that gets spent, and 20% of that goes to the ECB, and that gets loaned out, and that loans out, and that loans out, and that loaned out, and that loaned out. No money has been printed. Okay? Yes. And this was invented in Sumar. The Sumerians invented the fractional reserve banking system. So anyways, so that extra money, so it's really just an extra, was it 45 billion? But it's an extra 450 billion by the time you add it out. The extra, because remember, they were supposed to stop at 30 billion at September, right? So now they're like, no, we're not going to stop in September. We're going to do 15 in October, 15 in November. So that's an extra 45 billion that wasn't in the plan before. And then you frack that out, and it's 450 billion more euros going to enter the money supply based on what was just announced as change in policy. And an increase in supply, well, let me ask you, what happens if there's an increase in supply and demand stays the same? Okay, so the bottom here says this is an increase, but in the amount, right? And this is the value. So if the supply increases, you have to shift the supply curve this way to supply 2. Okay, so supply 1, but supply is increased, right? So we shift this curve out. So the ECB is going to increase the amount of euros in the market from quantity 1 to quantity 2, which is an increase of 450 billion through the fractional reserve banking system, right? So now we have to look right. The euro used to be worth this much, right? And now it's worth this much. So the purchasing power of a euro has gone from value 1 to value 2. And in this model, which now we have to do in blue, the euro has dropped relative to other currencies. Okay? And that's what you see here. More euro, less value. Correct. So what is the Fed doing right now? The ECB is buying bonds. What's the Fed doing? No, they're not sitting on interest rates. They're raising interest rates. How do you raise interest rates? They're selling bonds. The ECB is buying bonds and they're getting this. Right. So in this case, if we're talking about dollars now, in contrast, right, if these are dollars, the Fed is not selling bonds, they're buying bonds. No, they're not, sorry. They're not buying bonds like ECB, they're selling bonds. So they sell some bonds to Bank of America. Bank of America gives, what does Bank of America give the Fed in exchange for the bonds that the Fed gives Bank of America? They give them money. So the money supply is then decreased. So now we get a move like this, okay, where now we're at supply 3, and there's less supply of dollars. So we'll do this as Q3, quantity 3, okay, and value 3 now. And you'll see that actually for the dollar, the less dollars there are in the market, that's the supply moving left, means there's less dollars, okay, in the foreign exchange market. And the theory is then the value goes up. And that's what you're taught in school. The missing part is the fact that it's a reserve currency. And that general rule may not be always applicable when it comes to the reserve currency. Okay. Well, most of these bonds that are, let's just call them all assets, that the 3 trillion in assets that the Fed bought, most of them have a maturity date. A mortgage will get paid off somewhere between day 1 and the end of 30 years. Bonds will mature. They have a maturity date. And at one day they just mature and disappear. So somewhere between now and 30 years, those $3 trillion in assets on the Fed's balance sheet will just no longer be on the Fed's balance sheet. And that wouldn't affect foreign exchange at all. Right? Now, if the Fed for some reason owned foreign assets, which that's not what the Fed does, then that would change things, because then you'd have money crossing the border. But the Fed buying domestic assets doesn't affect foreign exchange at all. It only affects money supply. Okay, wow. So, cool. Very interesting. Looks like dollars gained against the pound, dollars gained against Norway, dollars gained a little bit against the kitty CAD, dollars gained versus gold, and oil hasn't moved a bit. You and I. So let's look at. Guess we're supposed to look at all things euro. That makes sense. Where's my scan euro? There it is. Alone, 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 oh my. Hey, look at that. Euro Kiwi. Huh? What do you think of that? Tin roof. Rusted. That's what it makes me feel like inside. Morgan, well, wouldn't it be the same, Morgan? You guys are so funny sometimes. All right. You want to look at what, euro pound or pound dollar? Okay. So we are at a sell zone. Remember, I did this for you guys already. This is the second one. Up there is the target for bulls. So I guess we'll just leave it the way I have it. So here's what we did 4 days ago. I said if you're a bull, you would buy it here and your target's up here. If you're a bear, you would sell it here and here. See what I mean? It's all pretty easy if you have a trade plan. So bulls are already profitable and they're praying that this ends up being a fib, right? And bears have an opportunity. They're like, oh. So dollar is strong because people are getting out of euro and they're buying their dollar back. So that's an opportunity for bears. Remember, bears are supposed to sell here. We knew that on Friday of last week. We certainly knew that on Monday of this week. You had a chance on Tuesday. Wednesday, you were profitable. Thursday, we're back here, but it's still a sell zone. And you're going to look for a double top now. Plus, you have the fundamentals behind you. And then up here is also a sell zone, but, you know, it's Thursday. I mean, it's a little late for that, right? So if you're a bear, this is really, 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 really simple. If you're a bull, you already did your job on Friday or Monday, and you're at break even, and you're hoping this breaks to the upside, right? Easy, right? Nothing's changed. Except if you shorted, you're getting paid now on the short term. But if you're a bull, you're already bought it and you're already profitable. You might have jammed your stop in here, lock in a few pips and walk away. But really, nothing's changed in days. I think that's cool, though. I think that's super cool that nothing has actually changed. If you had a plan, right, nothing's actually changed. You're still doing your thing. Yeah, Michael says, can you explain? Okay, if you see a counter trend opportunity on a Thursday, don't take it. It won't work. Right? Yeah, I just explained it. Now, how do I know that? I've sat at my desk somewhere between, let's say, 6 hours and 18 hours a day for 15 years, and that seems to be what happens a lot. I'll take it on a Tuesday, I'll ignore it on a Thursday. Now, who took notes? I think it might have been Monday. Who took notes on that? Right? I said, oh, for show on Tuesday, right? Oh, faux show. What happens on Thursday? Not gonna do it. Right? By the way, in neuro-linguistic programming, that is called anchoring. So yes, I know I act like a goober a lot. I know I'm 45 and I act like I'm 14. But you might actually remember some of these things if I can anchor them. Humor works. Sometimes having a serious conversation works. Sometimes, you know, a good old bitch slap will work. Now, it's a little hard for me to do that, but sometimes I'll try to get that. Even a negative emotion will work. That's what I mean. If I have to slap you on the face or insult you or, call your mother a bad name, if I can anchor something to that emotion, then you file that away in part of your brain and you actually remember it. Okay? An example of that is, imagine a vacation you went on 15 years ago. How many minutes of that vacation do you actually remember? You might have been gone for a whole week, maybe it was 2 weeks. How many minutes do you actually remember in detail? Like almost nothing. Statistically, less than 1%. Okay? So, but you can train yourself, by the way, you can train yourself to remember exact moments. And so I remember one time in Paris, it was my wife's first time there. She was my girlfriend at the time. And we're walking to the Eiffel Tower. And we stop in the little park, kind of like right there on the edge. You walk through these beautiful little streets where there's little cafes and beautiful townhomes or whatever. And then you come around the corner, you get to the thatch of trees. And they're beautiful trees and nicely landscaped. By the way, the Eiffel Tower is horrible now. Terrorism has ruined it. It went from a beautiful place to now it's just filled with, barbed wire fences and stuff. It's horrible. But this was all before that. So it was just beautiful parks. And so we're walking, and I know these things, right? I've been using NLP, even in sales, for 25, 30 years. So anyway, so we stopped, as we're walking, I said, you know what? I want to make sure we remember this moment, your first time to the Eiffel Tower. I want you to remember it forever and us being here together, right? And we were on our way to a fancy, fancy, fancy dinner, very, very fancy dinner. Anyways, so we're walking, and I said, we stopped at that first tree, and I said, I want you to remember this. Now look at this tree, right? We're in the Eiffel Tower Park. It's a giant park, the giant Eiffel Tower. Like, look at the Eiffel Tower. No. Look at the tree. And I said, look how beautiful this tree is. This tree out of 1,000 trees. Look how beautiful this one tree is. I said, look at the bark. And I can remember the shape of the bark. It was a very specific type of bark. And she said, yeah. And I'm like, oh, let's look at it and feel it. Just reach out, feel the tree. Feel the tree and remember this moment. Remember being here in the park. Remember the way that the lights on the Eiffel Tower spark off the buildings, right? Smell the air, right? Now you don't want to do it in the park. But anyways, remember it. And we both remember that 1 second, right? That 2 or 3 seconds, right? We remember it very specifically. Okay? So you can train yourself. So when I say Tuesday, oh, for show, and Thursday, not gonna do it, maybe that anchors for some of you guys, right? And by the way, most people know that there's a restaurant on the Eiffel Tower, right? And so they get in an elevator with a whole bunch of tourists. They go up and it stops about halfway. Did you know there's one at the very, 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 very top? The bar holds about 8 people, and there's about maybe 20 tables for 2. So I took my wife up there. I had special arrangements. By the way, when Trump was there recently, that's where he had dinner. And you go all the way to the very, very, very top. You're in between giant wheels that lift the elevators, and you can see them spinning as you're having dinner. And you have the most amazing view of Paris. And so when we were done, we went down underneath, and I timed this all perfectly. And I said, let's go for a walk. And so we get down to and they let us out of the elevator, and we're right underneath the Eiffel Tower. And it was a little chilly that summer day, so I took off my jacket, put it around her shoulders, and I said, oh, by the way, and I pulled a ring out of the coat pocket, and I got down on one knee, and then the Eiffel Tower lit up and started sparkling, and I proposed. It was nice. Yeah. Isn't that nice? That was a good day. Sweet. Anchoring. Anchoring. No, she has no idea. She's like, well, that's the third one this week. No, actually, it wasn't, like, because she figured I was going to propose on that trip, but this was day 9 of the trip, and I hadn't proposed yet. Really? There were times like, hey, let's ride bicycles through Versailles. We'll have picnics. We'll sit on a blanket under a tree and have wine and cheese. And she's like, this is going to be it. This is going to be it. Wine's gone. Cheese is gone. Oh, let's get on our bikes and go home. That's funny. I got tears in my eyes. It's just funny. All right. Gold, Oscar Mike. Okay. Oscar Mike. Is this kind of what you wanted to do? I don't know. Okay. So you want to buy gold. You're like, Wayne, look at this. Wayne, look at it go. I got to get on this. I want to buy gold. Swing traders know that this is where you buy gold. Right? Look at this, like, who's buying it now? Like, where were you, tough guy? You're supposed to do your job. Remember the whole patience and discipline thing? Yeah, Wayne. Everyone needs patience and discipline. Every successful trader needs patience and discipline. Yeah. I got that. I want to buy now. I want to buy now. Look at it go. No, dude. The tough guy does the job. That's the tough part. Patience and discipline. So I teach you guys day in and day out. Day in and day out. Days, weeks, months, quarters, years, and decades. The plan, this is the buy zone. Now, it takes discipline to stay with it. It takes patience to get one of these right. Maybe this one knocked you out of break even. Boo-hoo. Did you take this one? Did you take the breakout roll reversal one? So you're in here? Like, if you're bullish, this was the buy. By the way, not down here, not down here, not this price. It was exactly whatever that is, which I can't see. 1,294. I remember saying that, well, it must have been for sure Monday, right? And look at this to the exact penny. Okay? You see that? That's what the tough guy does. What kind of person, what kind of trader is jumping on it, you know, here. Someone that is reactionary, reacting to the news. Now, maybe it's an okay thing because of this, it's a central bank news. Fine. But if you skip scalping that, maybe gold is not the best scalping, but you know, opportunity, but maybe you're jumping in and you're picking up some income stuff, right? And you're jumping in, jamming a stop, jump. Okay, fine. It's not your career, okay? I mean, they're free throws, but sometimes you got to dunk, sometimes you got to take 3-pointers, right? But you're not, you know, you're not going to win the game on free throws alone. I don't know if that makes any sense. So, let's go to this. what I would prefer is you say, okay, something's happening here. It's central bank related. The Fed is raising interest rates confidently. The ECB is very hesitant to even end QE. Can't even end QE. So you put that in your pipe and you think about it and you create some plans. But I don't think your plan on Monday was wait to get to the weekly R2 and start buying. So what is your plan? Well, maybe you start identifying support and resistance. Maybe your fundamentals have to be updated and you say, well, this new news is important. This new news may change my outlook. Totally acceptable. If it's a change in central banking policy, then you should change your outlook. If it's just like a hot CPI, you're like, well, okay, that's good, but one data point a trend does not make. So you say, well, that's interesting. I wonder what the next CPI is going to be. I wonder what PPI is going to come out. Does it confirm the CPI? That kind of stuff. But a change in the policy of the central bank, yeah, your analysis of news releases, your fundamental analysis of news releases, is to figure out the central bank's likely next step. So if they change their policy, then yeah, by definition, now you don't even have to think about it in the sense like, what might they do? They did change. So does that mean you're a bear on the euro? You can because now, as we saw, it's not just an extra 45 billion that wasn't in their policy before, right? Because now they're doing 15 billion October, 15 billion November, 15 billion in September or December. That's 45 billion. Through the fractional reserve banking system in Europe, we know that will actually be 450 billion. So 450 billion will enter the euro money supply that wasn't going to enter before. Does that say to you, well, maybe that'll give me a bearish outlook for the euro? Sure. Oh, nice. But whatever the case may be, reacting now is probably not patient or disciplined. Yeah, you can do some income trades and skip scalp, and that's fine. But like, what's your next plan if you're trading gold? What are you going to do Friday? What are you going to do Monday? To me, so much more interesting of a question than let's react. Let's overreact to today's event. So how can we better predict gold price by fundamentals? Okay. Typically, gold is an inflation hedge. Okay. Typically, gold is also a safe haven. Typically, gold is the anti-dollar. Okay. So buy a book on gold. Okay. I'll give you an example. I like oil. I like trading oil. I like oil because it's used in macroeconomics, right? I mean, it's actually consumed. A factory that needs electricity will probably need some either coal or oil. So I get it. Retail sales 0.8, way better than expected. X autos, very good retail sales. Holy schmoly. That's a good number, guys. Jobless claims 218, even better than expected. Everything's hot today, guys. Everything's hot. And by the way, do you think we'll print like 4.5 on GDP? I think we're going to print higher than 4. It's going to be interesting. So anyways, good numbers. The Fed's going to keep raising interest rates and maybe have to increase the rate in which they, right? So right now, everything's golden in the world. Now, trust me, in about 2 weeks, everything's going to be different. But Right now, everything is hot. Pro-dollar. Holy smokes. Interest rates going up. The economy is booming. Funny thing is China's slowing down. What's up with that, right? Amazing, guys. Here, we can go through some of this together if you want. It hasn't been updated yet, some of these things. But anyways, very, like, X autos. Look at that, 0.9 versus 0.5 expected. Advanced retail sales, month over month, 0.8 versus 0.4. Big numbers. Like, look at this import price index, 4.3. I bet you our GDP is going to come out in the second quarter like 4.3, 4.5. Okay, so Michael says, why is Japan so hot? Are you saying that because the yen is strong? If that's the case, the funny thing is a cold Japan creates a strong yen. Be careful, Michael. Strong yen is cold Japan. We talked about it yesterday. When the yen is strong, what are Japanese investors doing? What's actually happening to make the yen strong?
Draghi reiterating confidence that the inflation convergence will be sustained. And reiterating the policy statement, and again, he saw interest rates hold steady through to summer of next year.
Japanese investors are buying Japanese yen. That's why it's
also
strong.
That the taper will start in October, that 15 billion per month through December. Again, reiterating that statement we heard about 45 minutes ago.
So that means they had some money in Europe, they want it back. It's funny, right? So don't think of things like dollar strong, that's good. Japanese yen strong, that's good. Don't think that way. It's not necessarily true. And it's not the same for every currency. A strong dollar is bad. So Europe is still sucking wind. They can't end quantitative easing. And the dollar's strong. But let me ask you something. Is that good news on a global macroeconomic scale, where the third largest economy in the world still needs emergency measures just to stay afloat? Is that really good for everybody? Does China benefit from a Europe that's choking on its own blood? No. China wants to make stuff and ship it to Europe. What about Japan? No, Japan wants to make stuff and ship it to Europe. So Europe choking on its own blood, still on life support, that's horrible for everybody involved, right? Involved. It doesn't affect
State of Years. The press conference gets underway. 117.
It doesn't affect Uruguay. It doesn't affect the Congo because those countries are not in the international system. But it sucks for China, right? It sucks for Japan. It sucks for Germany. It doesn't really help the United States at all. We would like to be selling some of our stuff to Europeans, right? So it's not good. So what's the consequence of a third largest economy in the world and a major currency? What's the net result? The dollar's strong and the yen's strong, and that's bad. Yes, Michael, I should have, but they didn't, right? No, Rob. Yes, but no. Well, you're in the right place, Mikhailovich. So the plan is I'm supposed to be moving my my screens down to this evening. So I'm looking forward to that because I'm used to watching things like copper and I'm like, where's copper? Oh, I don't have copper. Okay. So let's go back to like the really important things. The really important things. The last day of the month and the first day of the month. The last day of last month and the first day of this month. We had this as a buy zone. And I marked it with a giant X. Somewhere in here you want to be a buyer. And the last day, let me clear that up. The last day of the month was here. Huh. Seems like you could have bought it. But on the first day of the month, we were here. Seems like you could have bought that. Okay. This was a possible buy. This was a possible buy. And the weekly target is here. So this was Monday, right? That's what this other one was. If you were still a bull, if you were a bull down here, then you're going to be a bull here, and that would be the buy.
And in 2020, growth maintained at 1.7%. So just a small tweak lower for the current year, keeping the 19 and 2020 outlooks unchanged.
So ECB staff forecasts have been reduced from 2.4 to 2.1 on 2018 GDP. That's why. Okay. So you guys remember yesterday I was explaining the FOMC meeting and how it was broken down in the agenda. And on day 2, you have the staffers come out and they give, I think it's called the blue book. It might be the green book. I'll put blue book here. And this is not released publicly. This is only from the Fed staffers, all the quants and PhDs, so the head of that department walks into the FOMC. The FOMC on the day before, they heard from all the different regions of the United States, the state of their affairs. So now they have a great overview of how every region in the United States is doing as far as their economy. Current and then forecasting, because each president of every Federal Reserve Central Bank has spoken to business leaders in their region to say, how are things in the future? Do you expect new, are your customers buying new stuff? Are they telling you good things? What's your outlook, right? Are you going to hire more people? So they have current data, which is backward looking, what has happened up to now, but they also have forecasting data based on surveys with local business leaders. And then they put that into a beige book, and then that's been discussed in day one. And every Fed president does their little speech about how their region's doing. Great. So on day two, every person on the FOMC has a pretty good idea how all the regions in the US are doing. On day two, the head of the staffers, the head of all the quants comes out and says, hey, we've crunched the numbers, we've pumped it through the models, here's the things that we think are happening, and here are some suggestions on what we think should be done. Okay? And then they decide as a group what to do, and the voting members vote, and then they come up with a press release and they release it. So the ECB, they also have, obviously, a staff that pumps out all the numbers and says, hey, ECB, our forecast for the short, medium, and long term are X, X, and X based on these models and this data. So they came out in today's meeting and told the voting members or all members of the ECB, they said, hey, guess what? We told you earlier that we thought GDP would be 2.4% for 2018. We've been looking at the new data, things, right? We know, we meaning you and me, we know the data has been quite poor over the last 6 weeks, 7 weeks now. Well, the ECB staffers know that as well. They crunched the numbers and they're like, no. We were wrong. We have new data. We've run the new data through our model. We're reducing the 2018 forecasted GDP level from 2.4. You know what? We're only going to get 2.1. Okay? And that's why Draghi did what he did. Okay? Okay. But what I'm trying to show here, okay, this is QE yen. Can you see here that we had a clear, calm set of plans? It was with precise numbers for entering, precise strategies behind each, and there's a monthly swing, there's a weekly swing, our target's up here. It's above all this other noise, isn't it? Isn't it like elevated at a higher level? What about yesterday's FOMC meeting? Oh, what about the ECB? Oh, right? What about the retail sales and everything? Oh, you're like, about it 2 weeks ago. It went up. Of course it went up. And then this week it opened at M2, so I bought it again. Of course it went up. Right? You see how this is an alternative way to trading versus the hype and the volatility and the craziness, and this is good and that's bad and what is this and what's that? London breakout. What's a London breakout? What do I do now? I mean, I go up or go down. Look at the big red candle. I guess I have to be short. Right? Okay. So, on Monday, we said 2 things for this pair. Okay? Here's what we talked about on Monday. This is a bearish zone. If you're a bear, you're going to look for plans to sell around here. Or here. Look how precisely I drew this. Wait. It's pretty accurate. You didn't get a sell here. Oh, well. But you got a sell here. Oh, right on. Remember, we said if you're up here on Monday, yes, you can take the shot. If you can do Tuesday, if you're up here, yeah, you can take the shot. Wednesday, if you're up here, yeah, you can take the shot. Thursday, if you're up here, can you take the shot? Come on. Don't leave me hanging. Don't tell me no. Thank you. No, not all for show. Michael, sit on the floor. Not gonna do it. Come on, guys, anchor it. You got to anchor it. But it's not a no. It's a not gonna do it. And if you could say it like George Bush Sr., not gonna do it. Right? Yeah. Yeah, Hassan says that. Yeah, that can happen. But that's irrelevant. What you do and how you plan is relevant. You're going to get knocked out. You can have bad luck from time to time. FOMC creates volatility. That's what it does. Don't worry about it. But it won't do it next time or the next time or the next time or the next time or the next time. And in 15 or 20 years, you're like, yeah, well, you know, only 90% of the time does it work. Read my lips. Not gonna do it. I said, Barbara. I want to sell the USD yen. But Georgie, it's a Thursday. Don't do it, Georgie. Think of the children. Think about Jim and little Georgie Porgy. Yeah. Yeah, I grew up in the 90s, bro. Yeah, so anyways. So, hey, you see how we can very calmly plan these things? Right? Thursday and Friday, not going to do it. There is no off for show. Okay? Anyways, let's flip this. You totally disagree. You're a bull. USD yen is going up. Tell me right here, right now, don't even look at this chart. Where do I buy? It's either late Friday or early Monday. Where do I buy? M2. Oh, right here? We're done. Like what? Right? Like, dude. Right? And I teach you guys every day this. I have a swing trading course that teaches you that. I have a swing trading group in which I say, hey, if you're a bull, this is where you're going to buy. Right in there, off the monthly pivot. You probably want to buy it around 109.20 and a half. Oh, but the ECB. Like, you should have just bought it on Monday and taken profit on Wednesday. And then when you're done with that, You're like, oh, it's Wednesday. You know, I could probably get short this too if I wanted to. Huh. Okay. See, all of this is easy, right? Hassan's like, well, what if I was a bear and I got knocked out? Now what do I do? The answer is always the same thing. It's always the same thing. You're a bear, great. You sell at resistance. Okay? Cool. Where's resistance? Now, do you want to sell resistance on a higher high, or do you want to sell resistance at a higher low? There you go. You want to sell the higher low. Good. You know as much as me now. Find your high low, sell it. You might lose a little bit of money, but you should make more money than you potentially lose. So where's your lower high? Well, it might be here, or it might be here. What do you think? Smell like a plan? Huh. You might be wrong. You might do this. So I suggest you use a stop loss. Is that too simple? Am I oversimplifying things? So yen is strong, dollar is stronger. Go find something to kill. See, I don't trade dollar yen usually because I'm a dollar or a yen trader typically, but I don't generally trade them against each other. It's just what I do. That's my thing. That's my shtick. Okay? And with that, I bid you adieu. I hope you have a wonderful trading day. I have a lot of extracurricular activities today. I'm moving my screens down the office. And I have an 18-wheeler truck with forklift coming to deliver my movie theater seats. So I'll get to spend that time. Luckily, I'm not in school, so I don't have homework. It's just feels so weird to not have homework. So I'm going to have a busy day wasting unbelievable amounts of time. Yeah, well, the theater is big enough for 12 motorized chairs. I got the ones too, like you can lean back, right? You can do this and your feet go up and it holds your feet, but then the neck goes, so even the neck is powered. Because the idea is if you lean back to watch them and you're all the way back and your feet's all the way up, you have to hold your neck up, right? And then your neck is up because you're looking forward, but your seats are back. But not, this one, even the headrest is automatically, so it knows the prime angle for where your screen is. So even your neck is beautifully supported, and, you know. So anyways, they're nice. They have USB chargers and LED lights and oh yeah, the LED lights are being installed in the ceiling today too. So there's some interesting things going on. Unfortunately, I like to work. So all this stuff actually gets me in a bad mood. I was in such a bad mood yesterday, you couldn't imagine. Because I get pulled away from work, and I love work. I love trading, and all this other stuff is nonsense, and it really makes me upset.
SB trying to know that they did not discuss the reinvestment.
So it might sound like fun, but I like working. So anyways, without further ado, I guess I got to go. But I will see you tomorrow. Tomorrow's going to be a nice day, some good trading. I'm very thankful for how the week went. I think if you go through your charts, you will find that a lot of our swing trades worked out really nice this week. So I hope you had a good week. And if not, I highly recommend that you stop and think about it. I don't care if you lost money or and all that kind of stuff, but like, don't worry about that. Like, raise yourself, get yourself to a higher level, and really analyze yourself, analyze the markets. How did the markets react this week? We had FOMC, we had this ECB stuff. There's retail sales that came out, and there's a bunch of other things. There's a lot. It was an important week. Okay, but I want you to think and say, what actually happened? How could I have traded it? What did the price action tell me? What were the correlations? Like, look at all the yen pairs. Did they all move together or did they not move together? What about the dollar pairs? Did they all move together or not? And by what I mean was the dollar generally strong or weak? And did it change over the period of Monday to today? And if so, when? And then why? Like, ask yourself some really big questions. And I think if you really look at it, you'll start to see that there are these repeatable patterns. Like, the week opened in a certain way, and for the first 72 hours, it behaved in a certain way. And then it changed. But they changed at logical prices, and maybe even for logical reasons. Right? You see what I mean? And then, how did you behave? And don't get upset about being right or wrong. You're going to be a bear in a bull market from time to time. You're going to be a bull in a bear market from time to time. But what led you to be the bull or a bear? Or what were the things that changed it? If it used to be bullish but then turned bearish, were there any clues? What happened last week? Okay? And I want you to really think about that. Okay? And I think taking time like that takes you away from the video game mentality that trading can be looked at, or you get sucked into that mentality, or there's lots of YouTube videos and lots of other sort of, experts selling you this get rich quick scheme kind of stuff, and it's really easy to get sucked in, but I think, like today's a great example. I think if you can back yourself out of it, you can see like, oh, there's a way better way of trading this. And it's based on logic and intelligence and forethought and insight and planning. You're like, oh, and if you got all that down, dare I say, it may not be easy, but it might actually be easier than, scalping only, flipping and stopping. And, you made $500 on 50 pips. And you have $5,000 in your account, you're over leveraged gambling, right? We gotta stop that. So hopefully I can show you that there is a bigger, more elevated, higher level, enlightened way of trading, and I want to get you there. So peace on earth. May the pips be with you. May our profits be above average. And thank you for opening a trading account at TradersWay. And if you haven't done so, shame on you. Please do that now. TradersWay.com. I'll see you guys tomorrow. Well, thank you, Mike. And honestly, thank you. Thank you for being here every single day. I know you guys are working hard. Oh, Alan's got his TradersWay account set up. Right on. Welcome to the family. Whoop, whoop. Okay. And I think maybe I should do a summer school special since I'm leaving pretty soon. That way you guys have 3 weeks to go through, like, what is it, 50 hours worth of training videos. Dalbert, are you talking about TradersWay? If you got it all set up and stuff, contact support. Yeah, contact support. And say, hey, yeah, no, I'm just an analyst, right? I don't know anything about anything. How many people would like a summer school special where you get access to every single video on FX Bootcamp? Maybe I'll do a little. All right, I'll tell you what. The way to do this would be easiest if you email me, wayne@fxbootcamp.com. I'll create a coupon code. So it used to be like $2,000, and then a year ago, yeah, I guess a year ago, I created something called Summer School, and I there was a discount, 1,382, I think. So it's now down to basically $1,400. But what if I gave you a coupon code for that old special, so it's even less than $1,400? That's the scalping course, the basic trading course, the swing trading course, the fundamentals course. It's a lot. I mean, it's like going to be 50 to 100 hours. Yeah. Yeah, it's a lot. But that's, you know, so if I'm at Harvard for 3 weeks, 3.5 weeks, that would give you tons of time to do that instead of blowing out your trading account in a quiet market. All right, so money management, there isn't something specific in that. I don't think there's something specific on that, but I would lower it to the smallest lot size you possibly can. So again, email me and I'll make it less than 1,400, whatever, I'll come up with a number. At fxbootcamp.com. And again, it's really something to help you guys while I'm gone. You'll have the time. Hang on. But you got to email me, otherwise I'm going to forget. I'm going to be building movie theater seats all day or something. And there we go. Okay. So I'll give you guys a coupon code. So then when you'll sign up for I think it's still called Summer School. 1,382. You'll buy that. You put it in your shopping cart. You go to exit, and then there'll be a coupon code area. I'll give you a coupon code, and we'll knock it down again. Okay. And if you don't send me an email, it doesn't matter. I mean, you either send it and you'll get a coupon code. If you don't send it, I'm probably not going to do anything special to get you to join. So anyways, hey, gotta go, bro. Ladies, germs, see you tomorrow. Yeah. How about we'll make it like $999 or something. So almost another $400 discount. It's pretty reasonable, I think. But you got to email me, otherwise I'm going to change my mind. All right. So peace on earth, may the pips be with you, may your profits be above average. I'll see you guys tomorrow. Should be awesome. And then swing trading group, we'll be meeting tomorrow as well as a group. And then portfolio managers, we're going to meet in basically 25 minutes for the stock market open. Portfolio managers? Me too over there. All right. Take care, guys. Cheers.